Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
It's a busy Friday, and we're just getting started here on Bazaar Morning Call. Lots of news developments coming in thick and fast from the US. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi, good morning.
Hi, good morning, folks. You know, I was dreading this Friday morning, but I must say, waking up and going through all the headlines, the Trump-Modi meeting and the reciprocal tariffs, I think it's not as bad as one would have perhaps feared.
Well, that's right. You would have to believe so, that it's not as bad, at least till now. And we'll have to wait by to hear for more. But guys, lighten up a little bit. It's a Friday. It's Valentine's Day. Wishing all your loved ones, very happy Valentine's Day. Lots of love and happiness. But I know we've got a market to get with Prashant. And I know BV is going to get something special in the evening.
Nice. So where's the pink? The shirt and the sock. Well, we can't show you the sock, right? Well, maybe we will later. Let's just quickly start from the beginning, right? In terms of the developments. There was a lot. And there is a lot. So we'll just quickly wrap up things. And if you're following our social media handles and Twitter feeds, etc., X feeds now, I mean, you're aware of what's happening. Now, reciprocal tariffs have been delayed. And, you know, they're not being imposed. They're delayed but not forgotten. And the delay in reciprocal tariffs, which Trump had said he will impose, has essentially taken off some risk premium from equities around the world. If you look at futures or how the US market's traded, I'll get to price action in just a bit. But on reciprocal tariffs, what Trump said and the Commerce Secretary said is that the studies will be completed. So they want to study how to go about it, what products, because they're not universal tariffs. They are product-wise. And, you know, you charge this on US imports into your country, I will charge the same rate for your import of that product into our country. So it's product by product, region by region. So what they've said is that they'll study all of this, completed by the 1st of April, and these tariffs will go into effect from the 2nd of April. That's why I said they've been delayed but not forgotten. But it does kind of look like this is, you know, what we always have known, maybe at the bottom of our hearts, that Trump is someone who wants to negotiate a better deal. He doesn't want to sort of put all his chips on the table, keep the threat looming, and then eventually work something out which is favorable for the US. But that's essentially what we know so far. Rest, of course, is all interpretation. The other big one was Prime Minister Modi-Trump meeting, which happened last night. And we'll discuss this threadbare later. But there are three or four things. One is there are statements on defense that they will sort of increase cooperation, joint production, etc. The one concrete thing which seems to come out is that India will buy more oil and gas, oil and LNG from the US. And there are some numbers which have been put out as well. I think we bought $15-20 billion worth, and that's going to go up another $10-15 billion. We'll look at that. And then there is also a sort of, you know, will-do bucket. There are lots of things in the will-do bucket. And, you know, one, of course, is a trade deal, which there is lots of expectation that we'll be able to work something out with regards to the US. And there are some statements which we will play out. So that's essentially the broader sort of global setup this morning. It's positive, I must say, right? It's positive. Nothing negative for India, you know, positive kind of sound bites. And then the tariff deal being delayed. So it's not negative at all. Now, equities were higher globally. NASDAQ ended about 1.5% higher. Yields were down about 9 basis points, 4.53%. We had the PPI number. The CPI number was hot. PPI was also hot, by the way. But yields came off. And that was interesting. Dollar index has come off to about near 107 levels. Very good news, again, for flows, EMs, etc. And the other one is, I've put this up every day for the last at least 2 weeks now, Russia-Ukraine negotiation news. It was limited. Nothing very new last night. There was a lot of headline day before yesterday, and we covered that. But between today and tomorrow, there is that Munich Security Conference, and could we see the outlines of a peace deal? And that's the third thing, which I think is positive and which will keep markets hanging. Well, will something be done to at least get to a ceasefire and then maybe broader negotiations, etc.? So let's just quickly wrap up the levels yesterday. And I think the setup is positive. Yesterday, of course, the market sold off, but there was all of this stuff hanging. as we were going into the close. The market did not cross the 20-day moving average. We fell short by about 30-40 points. That level is 23,284, so we got to take that out first up. Downside level is still 22,800, but I don't think we need to worry about that, at least today. But that's 22,786, the 27th of Jan lows. And market still could be in the early stages of a leg higher. You got to, I mean, that's the way, broadly, I would say, we got to look at things. Bank Nifty could not cross the 40 hourly exponential average, which is near 49,955. And that's the first number for the Nifty Bank on the way up. Nifty Bank, remember, has fallen lesser than other indices. And again, here, the process of sort of early bottoming out for the Nifty Bank. Fingers crossed. Let's see if that's the case. GIFT Nifty will come up on your screen to give you a quick sense of how we are likely to start. And we're about 85 odd points higher, at least. Right now, and an hour from now, we'll find out what the pre-open throws our way. Surabhi.
Hi, well, guys, when it's geopolitics and when it's high-profile meetings involving Prime Minister Modi, I always watch the body language very carefully. And if I'm right, I read some love out there. There was some Valentine's Day flavor for sure. We'll put up the visuals for you. And therefore, before coming to the headlines, I'm just talking about some of the interesting quotes. What did Mr. Trump say on Modi? We have missed you a lot. There was the handshake. There was the customary hug. So none of it was sort of foregone. Though the negotiations are going to be tough, even on the negotiations, President Trump says Modi is a much tougher negotiator than me. So, I mean, that acknowledgement, slight warmth, slight bonhomie, while, of course, this is going to be, a very carefully crafted trade agreement. And that's what both of them said, that we see wonderful trade deals ahead. That was Donald Trump. And Mr. Modi said that our teams will work on concluding very soon a mutually beneficial trade agreement, which is why I'm still being hopeful. As when the reciprocal tariffs are, met out for India, there's going to be a lot of back and forth. It doesn't look like a complete gloom and doom scenario just yet. Of course, the headline is out there that bilateral trade has to rise to $500 billion by 2030. And India has agreed to source more oil and gas from the US. In fact, some of the agencies and all this reports are trickling in. We'll go to Pariksha in a bit as well. That maybe India could be the largest trading partner from the oil and gas front. And then there's a deal on the fighter jets as well. That is perhaps in the offing as well. Not yet final, but it's being negotiated. Let's now look at how Asian markets are reacting to the fact that, yes, there is an executive order on, on reciprocal tariffs. But again, there is a time given. It's up till 1st of April to perhaps look at some kind of negotiation, some kind of parlays, which is why there's a mixed picture across Asia. It's neither fully green nor fully red, but there is some caution in Asia. You can't rule that out. The Japanese market is down about 0.5%. Shanghai market is absolutely flat. Singapore is slightly lower, but the Hong Kong market is surging away. And Hong Kong anyway has been outperforming us, for many, many weeks now, all through this month, in fact. Which brings me to our own market. The critical question is that will it be a thank God it's Friday for the mid-cap space? The mid-cap market has been so brutally pummeled this week, falling between 5 and 6%, depending on which index you're looking at. If you're looking at the mid-cap index, it's down 5%. Small-cap index is down 6% this week. The Nifty itself is down about 2.2%. So the big question is this painful mid-cap correction over or not? Are we somewhere close to the bottom? Those are the levels for the week that are up on your screen. In terms of the flows, again, the problem was never with the FIIs, but they're still net sellers, and that doesn't help. Selling about 2,800 crores in the market yesterday. Domestic institutions were buyers. They offset that. But the mid-cap correction is more because of HNIs, because of retail. We've been pointing that out. So let's see if that ends or not. At least from a tariff perspective or from a Modi-Trump perspective, we don't have a fresh blow to deal with this morning. So that's good news. Finally, some stocks, and we'll get to details in a bit. Hindalco's numbers came in. They look pretty okay, especially on the EBITDA front as well. United Breweries, the volume growth is actually very promising at 8%. Revenue growth is good, but there is margin pressure as well. So we'll see how the stock reacts. This Godfrey Phillips. Godfrey Phillips was down quite a bit, remember, in trade yesterday. But the numbers that have come in are actually very, very good. Very solid growth, margin improvement of 400 basis points. So let's see. And beyond earnings, there's Bank of Baroda that I'll watch out for. They're looking at raising some money, and some of it is going to be through a QIP, 8,500 crores. So let's see. But I think before we get to the individual stocks, Nigel, it's all about whether the hugs on Valentine's Day are working or not, and whether this tariff piece, if it's at least not immediate trouble for the market.
Well, that's right. And I think that was one of the factors that played the Nifty yesterday because, till the final 90 minutes, we actually appeared to be doing very, very well. And then the Nifty came off the high. So two factors could have played out. One is the fears of Trump's tariffs. The second factor was the weekly expiry as well. So that's why we did lose our way towards the end of trading session. But this morning, I'm feeling quite good because of a couple of factors. The global handover, one is the US yields were lower. The second factor is the dollar index as well has pulled back substantially. From around 108, it's pulled back to around 107. From an emerging market standpoint, you like it. And Brent crude prices as well are rather stable. So that's good news. What did the FIs do in the F&O market yesterday? Not too much. They added some longs. They unwound, they covered very, very mild shorts. And they continue to remain net short with close to around 1.8 lakh contracts on the short side. And in percentage terms, it's close to around 84%. You like a net short market from the FIs, and you're hoping that there is some good news that's coming about, and maybe most of the bad news is in the price. That's the hope. And then you could have some bit of these shorts covering out. For the last many weeks, that's not really happened. So we'll have to keep an eye out on that. The PCR, just a couple of trading sessions ago, when we went to those panic lows, it went to around 0.65. From there, it's bounced to around 0.9 or thereabouts. And two strikes, they're calling for attention. And this should actually be the goalpost of the market. On the upside, the 23,200 call, that's important. On the downside, the 23,000 put. So you want to keep an eye on both these two strikes. Punch in the premiums out there as well, and you'll get a broad range. On the downside, 22,750 important. The bulls will argue that maybe we formed a double bottom at around these levels. 22,750 to around 22,800 important. And resistance is at these levels. I say that because it's near the 20 DMA, and yesterday's high as well was in that vicinity. The problem yesterday was the Nifty Bank, which underperformed for majority of the trading session. And it's been going to these highs of around 49,800 or thereabouts. And from there on a day-to-day basis, it's meeting some resistance. So if you look at a level on the upside, you want the Nifty Bank to get past that 49,850. And on the downside, the recent low that we saw, that's going to be your reference point in terms of, the Nifty Bank. Well, moving to the advanced decline ratio, yesterday at least we had close to around 1,000 stocks that were advancing, which is heartening. After a couple of sessions, actually, we have had more than 1,000 stocks. So you want the breadth of the market to improve from here on. And just one more factor. This margin trading facility is only kept for the experts. Don't get into that because we've been getting a lot of queries about that as well. So you want the breadth of the market to improve, buy good quality stocks as well. And it's a Friday, I'm feeling good. Valentine's Day as well, and end of result season. Let's see whether there is some positive cheer on the Wall Street today.
I'm sure the wife is getting something very special today. So we will talk about that later after the show. But for the time being, let's move on to the equity call of the morning. This one's coming in from Morgan Stanley. Rhythm Desai of Morgan Stanley says most market participants await a turn in FPI flows. But what will move share prices up is an inflection in the confidence on growth, not flows. A policy pivot sets the stage for a growth recovery. Now, Rhythm says that India's underperformance could reverse in the coming months. Private sector financials could be the best way to play this, along with discretionary consumption and select industrials.
Okay, well, we have Jahangir Aziz, the head of emerging markets economics research at JP Morgan, and Ed Yardeni, president at Yardeni Research, now joining in. Gentlemen, great to have both of you here. And thanks very much for joining us. What I want to do is for our viewers, Jahangir and Ed, just play out very quickly some of the key sound bites coming in from Prime Minister Modi and President Trump, and then we'll just sort of jump into the discussion here.
India imposes a 30 to 40 to 60 and even 70% tariff on so many of the goods, and in some cases far more than that. And as an example, a 70% tariff on U.S. cars going into India, which makes it pretty much impossible to sell those cars. Today, the U.S. Trade deficit with India is almost $100 billion. And Prime Minister Modi and I have agreed that we'll begin negotiations to address the long-running disparities that should have been taken care of over the last 4 years, but they didn't do that. In the U.S.-India trading relationship with the goal of signing an agreement, and we want a certain level playing field, which we really think we're entitled to, and he does also, in fairness. So we're going to work on that very hard. India's been to us just about the highest tariffed nation anywhere in the world. They've been very strong on tariffs, and I don't blame them necessarily, but it's a different way of doing business. It's very hard to sell into India because they have trade barriers, very strong tariffs.
आज हमने द्विपक्षीय व्यापार को 2030 तक 2 गुना से भी अधिक बढ़ाकर $500 बिलियन तक पहुंचाने का लक्ष्य निर्धारित किया है। हमारी टीमें एक पारस्परिक लाभकारी ट्रेड एग्रीमेंट को शीघ्र संपन्न करने पर काम करेगी। भारत की ऊर्जा सुरक्षा सुनिश्चित करने में हम ऑयल तथा गैस ट्रेड को बल देंगे। ऊर्जा इंफ्रास्ट्रक्चर में निवेश भी बढ़ेगा। न्यूक्लियर एनर्जी क्षेत्र में हमने स्मॉल मॉड्यूलर रिएक्टर्स की दिशा में सहयोग बढ़ाने पर भी बात की।
Today, the Prime Minister and I are announcing a framework to strengthen those ties even further economically, and the U.S.-India Compact for the 21st century is a historic initiative that will deepen every aspect of our partnership and our friendship. Starting this year, we'll be increasing military sales to India by many billions of dollars. We're also paving the way to ultimately provide India with the F-35 stealth fighters.
Okay, well, Jahangir and Ed have been waiting by. Gentlemen, thanks for waiting, and we just wanted to play some of those sound bites out. Jahangir, to you first. Lots by way of headlines, these reciprocal tariffs have been delayed. And of course, there is the India-US bid as well. What did he make of it at a broad level? Then we can get into specifics.
Look, I mean, this has basically been a Trump strategy for quite a while, right? I mean, you saw that playing out in the case of Canada and Mexico, where he imposed the tariffs on things that were unrelated to economics, on border security, on drug trafficking, and then negotiated down to a delay for about a month. We'll see what happens to that. I think the reciprocal tariffs, the way in which it is being interpreted in the press, the news reports, analysis that we have seen, I don't think is exactly the way in which the Trump administration sees reciprocal tariffs. It is not just the fact that, well, India has X% of tariffs on US-made goods, and therefore India faces the threat of tariffs being raised to that level. I think if you look at the text of the executive order and the memo that came out today, when the US administration talks about tariffs being imposed to address unfair trade practices, they include regulatory policies, they include industrial policy, they look at FX, and they look at VAT differences. So I think the market needs to get used to the fact that when the US is talking about reciprocal tariffs to address these alleged or perceived inequities in trade practices, they're talking about much more than just tariffs being imposed. They are talking about things like VAT, and if you bring VAT into play, in the case of India, that quote-unquote cost differential or tariff cost differential widens significantly and impacts many more items than just looking at isolated items, which may be 50, 60, 70%. Look, I mean, India does not sell any advanced motorbikes in the US. So if US imposes reciprocal tariff on motorbikes, I don't think it really matters. But if it is a generalized reciprocal tariff that takes into account the differences VAT, that will matter.
No, absolutely. So it's not just about the rate on certain products, but it's a combination of things. But yes, for now, Jahangir, the question is, should markets heave a sigh of relief? That maybe, as you said, this is President Trump's style. I mean, to bring people on the negotiating table, and right, now it's been delayed. So
it hasn't been delayed. I don't think it's been delayed. I mean, if you go back to the executive order that was signed on the first day, that was an executive order that instructed the Department of Commerce, Treasury, and USTR to come up with a comprehensive plan about what to do on the trade side, right? That due date was April 1st. I think they're sticking to the due date of April 1st, and nothing stops them from announcing things in between. So I don't think there's a delay. What I think has happened is that the market's perception that the trade policy this time around will also be driven by the same considerations as in 2018-19, i.e. focused on China and some Asian countries like Malaysia and Vietnam. That has changed. because the first set of tariffs was on USMCA countries and on reciprocal tariffs. And the objectives of tariffs have changed. It is no longer about just leveling the playing field on perceived cost differential. It is also about other things like, immigration, etc. But importantly, it is also about other perceived differences in trade policies. And, we need to get used to the fact that could well be much more widespread than what we saw in 2018-19.
I'm so glad, Jahangir, you brought up that point, because it's not a tit-for-tat number just on the import duties. It's so much more, like you said, which is why I'm trying to understand. I mean, are markets getting a little ahead of themselves in rejoicing the fact that, okay, there was a delay between, Canada and Mexico, so they think that this will be negotiated, it won't hit that hard. For instance, I'm trying to figure out, the Hang Seng has rallied 15% in the last 1 month. Though, of course, a lot of these trade issues with China still need to be negotiated, and there is some element of reciprocity that China's already announced. So are markets, equity markets around the world, a little ahead of themselves?
I don't think so. I mean, I think it is part and parcel of this broad understanding of Trump trade policy or any policy, right? That these are oftentimes just negotiating positions, and the market, in effect, is shrugging that off, saying that, look, the bark will not be as bad as the bite, and consequently something which is less aggressive and less damaging will be negotiated, because at the end of the day, there is an impression or a belief, in fact, that this administration ultimately will preserve growth and prosperity in the US and not take it down to a path where that is lost. And I think all of those things are weighing on the market's beliefs that, this is just one part of, this is the way in which things happen. So until unless the market actually sees these actions and what the exact form of these actions are, I think the market this time around is going to wait till that happens. I mean, this wasn't very different from 2018-19. If you remember, Lighthizer started the investigation sometime back in 2017. And if you look at every indicator at that point in time, none of the indicators showed that things are going to be as bad till the actual actual tariffs on China were imposed. So I think just like that, I think they are going to wait till they see the writing on the wall. I don't think people are going to preempt it and try and take positions before that, because there is clearly, many ways in this administration can take these policies, and we've seen that play out. So I can't blame the markets, if that's what you're asking me to do. No, the markets isn't.
No, I was just asking. So I think you answered, Jahangir. You said that the bite probably won't be as bad as the bark, right? That's the way to understand this.
No,
right?
I'm saying that's what the market's perception is. I'm not saying it won't be. All I'm saying
but that's the market perception.
That's correct.
Okay. All right. I got that, Jahangir. Let's get Ed into the conversation as well. Ed, what do you make of the overnight developments? We here in India, the optimist will say maybe Trump's not going to be, as tough on us as the rest of the globe. But what is your understanding of, what you heard overnight and actions ahead?
Well, I think it's very important that there's been a semantic distinction in describing tariffs. It's been described as reciprocal rather than retaliatory. In other words, the Trump administration isn't looking to raise tariffs to punish other countries and then wait for them to retaliate even more, which is what happened in the early 1930s. In June 1930, when the U.S. passed the Smoot-Hawley tariff, those were retaliatory tariffs, and everybody just continued to raise tariffs. By calling it reciprocal, the administration's reminding us that the Smoot-Hawley tariff in the 1930s was reversed with something called the Reciprocal Tariff Act. And the idea of reciprocal tariffs is that you match them and then you negotiate them down. And I think that's clearly the goal here of the administration, is to get people to the negotiating table first and foremost by raising our tariffs to match their tariffs, and then hopefully to negotiate them down even before the tariff is implemented. So it's a very fluid situation. And I think on balance, the market's starting to realize, hey, this may end well, not badly.
Absolutely. Got that. Jahangir, with India and US, what we heard, right? India will buy more oil and gas, defense F-35s, but then the foreign secretary said, well, it's a proposal, nothing, there are lots of steps to cross, etc. But the one thing firm, which was this oil and gas, which we got to buy anyway, right? And that there was a big number, etc., which was put out. And then there was a talk of a trade deal by fall. Maybe we'll try to do something. What did you make of all of it? Specifically India-US.
Yeah, so look, any trade deal, anything that lowers trade barriers is good for both countries. We know that for a fact for many, many centuries, actually. So clearly, if there is an understanding that certain things or certain goods will be traded freely, US has a number of free trade agreements across the world. And if you look at the countries that are engaged with the US in the free trade agreements, they've mostly benefited from it. From Japan to Vietnam to Korea. So any kind of move towards lowering trade barriers is good in principle. Again, the devil will always be in details, and many detractors will say, well, the devil is always in the details, and that's what you should be worried about. But in general, anything that lowers trade barriers is a good thing. What and I know that governments like to promise, that, the trade deficit or the trade, really, this thing will, rise to X billion dollars and things like that. Those are great numbers to put out as, aspirational numbers. But at the end of the day, we have to realize that trade, like growth, like inflation, like everything else, is an endogenous variable. It reacts to policies and it reacts to prices, and how that evolves is where things will go. So in principle, yeah, we should be striving for lower trade tariffs, lower trade barriers. Trade barriers have been increased in India over the last 10 years. They need to come down, and lowering trade barriers almost always ends up in benefiting both sides.
Jahangir, just very, very quickly, we've discussed trade a fair bit. But, in the last couple of weeks, we've also had action both on the fiscal side here in India and on the monetary side. And everybody tells us at the end of the day, tariffs is one part of it. The Indian economy has to chug along and, revive, really, so to speak. What's your view on where this leaves us?
Yeah, I was waiting when you were going to ask that question. So look, we have a budget that was broadly in line with what people had expected. There's a question where the budget should have targeted, 0.5% or thereabouts of fiscal consolidation at this point in time. My argument has been that, the budget framework in India is such that there is no leeway avoiding doing something like that, because that's the way we are structured. And therefore, the burden of any kind of support now falls almost entirely on RBI. We spoke about last time, and I said, time has been ripe for quite some time for the RBI to ease rates. I think RBI will have to continue easing rates. We have another 75 basis points of rate cuts priced in, and this was way before the rate cut cycle happened. But again, macro policies, and I know it is the right thing to say, well, tariffs and global conditions are one thing, and we should, not focus exclusively on that. But at the end of the day, fiscal policy, monetary policy, the way it stands, it can provide some help. It can't really be the solution. That's where things stand.
Ed, so where does it leave markets, in your opinion? There is this other thing, Russia, Ukraine, and maybe a peace deal, a ceasefire at least. That'll be big.
Right.
War's been going on for 3 years now, I think, right? If it were to happen. But what's your sense?
Well, President Trump obviously thinks big. And usually when a president comes in, they have a goal of achieving 2 or 3 major pieces of legislation. And then they realize after the first 100 days or so, their political capital is no longer what it had been, and they just kind of ride through the end of the first term. And if they're lucky, they get a second term, and not much happens in the second term. This president has 1 term left. This is his second term. He knows a lot more about Washington. He knows how to play the game much more aggressively, and he has an agenda. I think the Heritage Foundation's Project 2025 is in fact the blueprint for what the administration is doing. It clearly was very well thought out, and it's a very determined policy to radically change the way we do business in the United States, especially the way the government does business. And on a global basis, it's certainly not a globalist agenda. It's an American first agenda, but it's not an isolationist agenda either. It's very proactive and very bilateral in nature, and obviously very ambitious in terms of hoping to accomplish a peace settlement between Ukraine and Russia and coming up with some solution for the Middle East, which ends this cycle of violence.
And maybe, absolutely, and will be good, right, across in that sense, sort of less conflicts around the world. We'll see if something were to happen. I mean, some have said that 20th is when maybe something could be announced. It's a victory day in Russia, so maybe symbolic, etc. We'll see. But those are visuals coming in from, of course, last night. We'll continue to discuss and debate this at length through the course of the next couple of hours or so. But Ed and Jahangir, thank you very much for joining us. I really appreciate both of you sharing your perspective on what's been extremely sort of fast-paced news cycle, which we are struggling to keep up with. We'll take a quick commercial break here, but we've got lots of stock-specific stuff that we want to cover as well. Our top 10 segment with our research team coming up. Hindalco, Afcons, Infra, Kalpataru Projects, Bank of Baroda are on our radar on the back of positive news flow. ITC Hotels, Manappuram Finance, United Breweries, Deepak Nitrite, Titagarh Rail, and Senco Gold are stocks which are likely to open in the red as well. Stay tuned.
Welcome back. So like we've been telling you, there is some caution across Asian markets. Not like a broad sea of green, but the Hang Seng has its own mood in mind, and that's been an outperforming market all through the last 1 month, including this morning. So the Hong Kong Hang Seng is doing really well, but the other markets are a little more cautious, 2% up now. Look at that. I mean, really attracting attention there. Let's get the implied open up on the screen to see how we could perhaps do 86 points higher. So that's the indication. What about individual stocks? Lots of names in focus as always, and we have a research team standing by with the list of top stocks to watch. Hi guys, happy Friday to all of you. Let's start first with the tail-ender earnings. Nigel, how is Hindalco?
Well, Hindalco's numbers, I would say it's good. We already have Novelis's numbers, which is bulk of their profitability, and that was weak, but that was on expected lines, and that's what you've seen in the last 1 month or so, actually. Hindalco has been in consolidation mode, though, in fact, the markets have been rather jittery. Focusing on the numbers, we look at the total EBITDA, which is the India business, aluminium, alumina, as well as copper. The absolute numbers bang in line with what we are working with. The aluminium EBITDA was a little bit lower, very, very little bit, slightly lower. But that's because of a one-time provision with regard to electricity duty. The numbers actually look good for the aluminium business. If you look at it on a year-on-year basis, the EBITDA per ton for the upstream business is now clocking $1,480 per ton. That's telling you the kind of cost savings that they're doing, the better product mix as well, and they've got the benefit of higher LME prices. Even on the downstream operations, it's stabilized at around $180 per ton. Both these numbers may not be sustainable, but it's much better on a year-on-year basis. Moving to the copper business, the management has been guiding that the copper EBITDA will cool down, from that 800 crores odd that we saw in the previous quarter. This time as well, it's closer to around 750 plus crores, so that as well is good. And the net debt number, because of the big capex in Novelis, on expected lines, that's moved up a little bit. I'll say these numbers are good and should get a thumbs up in today's trading session. Moving to Sudarshan. Sudarshan, tell us about ITC Hotels. It appears there's going to be a bit of an overhang on the stock. Tell us more.
Good morning, Nigel. So bad that is British American Tobacco Company had earnings call for 2024 yesterday. It has made a statement regarding its stake in ITC Hotels. As of December 2024, its holding in ITC Hotels is around 15.3%. Now, company says it has no interest to become a long-term shareholder of a hotel chain in India. And that is the reason that it's looking to sell its entire 15.3% stake in ITC Hotels, and the timeline that company has mentioned that by 2026 it's looking to sell the stake. Now, apart from that, another Suti also holds around 4.7% stake as of December 2024. So we'll have to see if there will be obviously there will be an overhang regarding the holding of both Suti and BAT, and we'll see how this goes ahead in the next 1 or 2 years. But for now, I'm going with red for ITC Hotels.
All right. So thank you very much for that. Well, let's focus on Manappuram Finance next. And Abhishek is here to tell us more. Abhishek, good morning.
Good morning, Prashant. So, if you take a look at Manappuram, the gold portfolio has been on the weaker side compared to what strong numbers that you saw for Muthoot Finance on the gold portfolio. So, gold tonnage for them is at 57.3 tons, which is down by 1.5% YOY and about 4% quarter-on-quarter. So, in tonnage-wise, this is the lowest tonnage that you are seeing in last 32 quarters or even more. MFI AUM, that's also declined massively by 14.5% YOY and about 16.7% sequentially. However, the non-gold AUM share, that's been on a declining trend. So that is now down to 44.6% versus 48.6% in the same quarter last year and about 46.7% in the previous quarter. Impacted the result is the provisions. Provisions increased by 270.7% YOY and about 113% quarter-on-quarter. Calculation does shows that the net interest margin has declined both YOY and quarter-on-quarter. So PNL with reference to Motilal Oswal, NII estimate is in line with Motilal Oswal estimate. However, PAT is significantly lower than Motilal Oswal, estimate. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, Vinny joins us. She's going to lighten the mood a little bit with United Breweries. How are those numbers, Vinny?
Doesn't seem like that great a set of numbers, though the company has managed to see a double-digit revenue growth this time, especially the seasonally weak quarters where the highlight is coming in. But overall, the numbers were missing the street estimate. Lower EBITDA mainly impacted by the marginal dip that one saw in the gross margins. Investment in supply chain is something that they have done as well. So that is impacting the EBITDA performance. Profits also impacted by exceptional loss, lower other income as well as higher depreciation. Numbers, when you look at it, we're seeing an increase in terms of revenue of around 10%, but profits have seen a decline of 55% and margins coming in at 7.1% versus 8% last year. So a bit of an impact in terms of the margins is what we're seeing coming in. Volume growth, that is coming at 8%, and the premiums volumes are up 33%. They've gained market share in this quarter. Keep an eye out on that. Overall, we'll watch out for triggers. There's going to be price hikes in Telangana, as well as likely new excise policy, something that we're watching out for. As of now, expecting a bit of a red coming in on the screen.
Okay, we'll have to work harder. We'll have to work harder. Vinny, thanks a lot for joining in and telling us about United Breweries. And Upasana, I don't know whether you're going to be helping out with that, but tell us about Deepak Nitrite for now.
Good morning, Nigel. Well, the company's reported a weak set of numbers. It's a clear miss across the board. Revenue, EBITDA margin, PAT, all three below the street estimates. Now, this weak performance is mainly contributed by companies, both the segments, that is advanced, intermediate and phenolics, and the margins of these, both the segments, fell to the lowest levels. Now, coming to the numbers first, revenue stood around 1900 crore with a downtick of 5% on a YOY basis. EBITDA stood at 160 crore with a downtick of 45%, and margins were down about 630 basis points at 8.9%. Company's PAT also saw a downtick of 51% on a YOY basis. Now, coming to the key segments of the company, that is advanced intermediates, the revenue saw a downtick of 8% on a YOY basis, and margins contracted nearly about 1080 bips at 3.1%. Coming to phenolics, the revenue saw flat growth and margins were under pressure, down about 440 basis points on a YOY basis. Now, margins were impacted due to higher input prices, plant shutdown, which resulted in unusual import quantities, is what the company has indicated. Company has also said that this is the first time both the segments are going through short-term challenges together. So all in all, weak set of numbers. I expect the stock to open in red today.
Okay, all right, got it. Upasana, thanks very much. So Deepak Nitrite, maybe some red there as well. Let's hop across to Vivek and see if he has any potential greens for us. Vivek, over to you.
Well, some potential greens. Most of the EPC companies, most of the construction companies actually faced a very tough H1 on the back of muted execution. Kalpataru Projects was no exception. They started off H2 on a much stronger note, but despite that, they've left themselves with a steep implied ask rate as far as Q4 is concerned to meet the stated guidance. Revenues higher by almost 17%, EBITDA higher by 13.3%, margins to at 8.4 versus 8.6%. That is something that we'll need more clarity on. Profitably muted, higher just around 1%, but it was impacted by a higher effective tax rate as well as higher finance costs. What's very good for the company, the order book continues to remain very strong in excess of 61,400 crore. L1 position 2 quite steady at 250 crore. The YTD order wins have come in very steady at over 20,000 crore. The other stock on the radar is, again, a large infra company, Afcons Infra. Revenues higher by 2.7%, EBITDA slightly muted, down 2.7%. Margins at 11.35% versus 11.98%. Again, some moderation seen as far as EBITDA margins are concerned. Profitability higher by 35%, but largely aided by much stronger other income, which came in at 120 crore versus just around 56 crore last time around. Going with the green on the back of the fact that the order book position is very strong, over 38,000 crore, and the L1 position that the company currently standing at is in excess of 10,600 crore. So L1 as well as order book very strong. Going with the green with both of these names.
Okay, all right, got it, Vivek. Thanks very much for that. Going back to Vinny now. Vinny, you're watching out for a bunch of other mid-cap stocks. Tell us the list.
Absolutely. So two stocks, Titagarh as well as Senco Gold, both on the back of their numbers. Now, Titagarh Rail, weak set of numbers was reported by the company. The profits are down by 16%, revenue seeing a decline of around 5.5%, and margin seeing a contraction of 50 basis points. 11.1% is what the EBITDA margin is at. Now, what is impacting it? We are seeing a bit of higher expenses, other expenses, as well as employee costs. Other expenses are up by 14% on a year-on-year basis, and employee cost is also seeing an increase of 45%, so impacting the bottom line as well as in terms of the margins and operational performance of the company. Now, when you're looking at revenue, what is actually seeing that impact is because the freight segment, freight railway segment, that has seen a bit of a muted performance in terms of revenues. The sales of wagons of two Indian railways were impacted this time by inadequate supply of wheel sets, and that is what is impacting the overall revenue over there. And passenger rail segment is also seeing a decline in terms of 51% in terms of revenue, just at 49 crores. So that is why a red coming in on the screen for Titagarh Rail. Senco Gold also, we are expecting red this time on the screen. Revenue saw a growth of 27%, but margins, profits of the company, that is seeing a decline. This time there's a higher material cost that has come in, and that is leading to the miss on the operational front for the company. SSSG growth is at 13-14% range. Studded ratio is at 10.5%. But yes, higher material cost is the main factor, and that is likely due to some custom duty adjustments that are there. So that is what one is watching out for in terms of clarity from the management. But as of now, Senco Gold is also missing the street estimate.
All right, Vinny, thank you very much for that. So we'll have, by the way, the management of Senco join us a little later. Bank of Baroda is the next one we want to address. Abhishek is here. Abhishek, back to you.
Well, Prashant, every year, lenders do take board approval for fundraise. So this time, Bank of Baroda has taken a board approval to raise up to 8,500 crore of capital. Now, capital raise will be done via QIP or other modes. Our board has given extension up to FY26 for raising 4,000 crore via 81 or Tier 2 debt. Now, what happens is that you take a one-year approval. If in case you are not able to raise money, this is the time that Bank of Baroda has actually sought an extension for that board approval that was already in place in July of last year. So this is out of the 7,500 crore of capital approval that they had taken from July, that this 4,000 crore has been extended up to FY26 by the board. Back to you.
Okay, all right. Thanks for that, Abhishek. Let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow around them are Hindalco, Afcons Infra, Kalpataru Projects, and Bank of Baroda. The ones that could perhaps start negative are ITC Hotels, Manappuram Finance, United Breweries, Deepak Nitrite, Titagarh Rail, and Senco Gold. Okay, so that's equities. Now, what's the latest in the world of commodities? We have Manisha joining in with the roundup of all the overnight action as always. Manisha, I did note, no let up in the sparkle on gold, but what else? So what's making headlines for you?
Oh, especially with Valentine's Day, you could actually be looking at more demand coming into the markets as well. But, well, absolutely, gold is holding at a record highs. And what with the conversations around U.S. reciprocal tariffs, 25% already on steel and aluminum, 10% of Chinese goods as well, and so much more being discussed right now. So this uncertainty, and if this continues for a longer term, then you are looking at more safe haven buying continuing in case of gold. Also, a slight decline in U.S. dollar has been supportive for gold, but that's exactly what you are seeing in many of the metals as well. I want to talk about copper because we are trading at a June 2024 highs right now. It is there are some conversations that the 25% tariff on copper could be extended as well, and that could disrupt the global supply chain. The net long positions, if you look at in copper, are on for a 6-week highest since the month of November. The manufacturing data from China, rather US, has been positive, and stimulus measures could be coming in from China. So this is what is keeping metals also in favor. Silver is trading at a 3-month highs as well. Zinc prices are up by 1.5% right now. So strong support continuing in many of these metals, precious and base metals.
All right, Manisha, thank you very much for that. We'll take a quick commercial break here. We're going to come back. And Mitesh and Shrikant Chauhan is a Friday, so we'll have Shrikant join us with specific trading ideas. Stay tuned.
Welcome back. Well, we have Siddharth Khemka now joining in to get a couple of fundamental ideas going. He's, of course, from Motilal Oswal Financial Services. Siddharth, great to have you on. And happy Friday to you. Of course, all the tariff talk has been dominating headlines, right? Including the steel and aluminum tariffs that US announced ahead of Prime Minister Modi's visit as well. In light of that, I just want to start by getting your take on Hindalco. The numbers came out yesterday, and I think they're more or less in line at the EBITDA per ton level as well. But then you have this whole situation looming in the background, the global tariff piece. What's your call on the stock?
Yeah, good morning and happy Friday as well as happy Valentine's Day to everybody at CNBC and as well as the viewers. I think, yes, if you see the performance has been strong while Novelis performance has been muted, India business has been pretty strong. The key overhang continues to be the tariffs that US imposes. I think Hindalco is much better placed with a lot of production capacity inside US, with Novelis having a large capacity there. So I think it's much more insulated compared to a lot of other European firms. So in that sense, I think our view continues to remain constructive and positive on Hindalco. The India business has been pretty strong, led by higher aluminium prices. Plus, we saw the margins improving. Both in the downstream EBITDA, if you see, in the downstream aluminium business, on account of favorable product mix. Plus, if you see Novelis, I think the volume growth is a bit subdued, marginally lower than our expectation, and the weakness in volume was primarily due to the lower value-added products as well as the automotive shipments. We believe that bearing the overhang, once that gets the air gets clear, and with Hindalco being on the other side, Novelis being on the other side, I think the stock should do well.
Okay. All right, so that's stay on. We have more questions for you. Do have to take a very quick break. We'll come back, get some more fundamental ideas going, and of course, also quick cue on the technicals. Back with that in just a bit. Welcome back. So as we've been telling you, cues across Asia are still quite mixed. The implied open has been telling us that we'll have a positive start, but some of the markets are taking it a little easy. Look at that. Taiwan's down. Mainland China is absolutely flat. The Nikkei is cooling off about 0.5%. The Hang Seng has a mind of its own. It's the best performing market in the last couple of weeks. Look at that, almost a 2.25% surge now. Implied open, let's get that up. Last time we saw it, it was suggesting an 80-point start on the upside. Now it's 88 points on the upside. So the bulls will want to hold on to some of that, perhaps, and get some Valentine's Day love, if I could pun on it. We'll take a break on that note, come back on the other side, and then we'll get you the trading calls for the day.
Okay, welcome back. 15 minutes to go for the market open, a minute to go for the pre-open session. Mitesh and Shrikant are with us. Gentlemen, morning. Let's just get to trades in terms of what you want viewers to do. Mitesh, what's on your list?
Morning, Prashant. So last few days, we talked about cutting short at lower levels and then looking at the bounce back. On both the days, we saw the market kind of come up from the highs. So, sustaining about 23,150 in that sense is an important point for me. I think today we will open around 20,100, 120 odd zone. But going and capturing 23,150, I think is important. Once we do that, at least, the immediate fear or the worry of decline would be arrested, and then we can see at some bounce back, which can be possibly stronger than what we have seen in the last few days. So I would keep a watch on that. With opening, in case you have longs and with a 80, 90 point kind of positive opening, you might want to reduce some longs and see if there is strength and follow through to get past 23,150 and then enter longs again.
Shrikant, what about, I got that. Shrikant, what about you?
Good morning, Prashant. Good morning, Surbhi and everyone. For Nifty, it is very clearly into indecisive mode, but till the markets are, until the Nifty is trading above the levels of 22,950, I am expecting market to continue its pullback rally, which it has started, to retrace the sell-off between 23,800 to 22,800. And we could see the levels of maybe 23,500. That's the view. So today we need to keep a stop loss at 22,950 for creating or for holding any long positions. And again, we can see the levels of 23,250. But above 23,250, we are expecting short covering in the market. So for the time being, 22,950 and 23,250 should be the range for creating any position in the market.
Okay. Trades, Shrikant, what would you recommend?
In that, I would like to go with creating long positions on SBI cards. There, if we see the overall specific pattern of the stock, then it is in a strong uptrend. Also, if we consider the overall its long-term pattern, then the stock has spent a lot of time for forming its base formation, and now it is into a very strong breakout. So based on its technical formation, I believe that the stock is having potential to cross its previous high of 1150, 1165. But at this level also, it's a buy with a stop loss close to 840. We also like Lupin Laboratories, and the stock is now very close to its long-term support levels. So close to these levels, it's a buy with a stop loss at 1980. So the stop loss is a little bigger because the stock is very close to its bottom level. But from here again, the stock can move to the levels of 2250 or 2300 levels.
Mitesh, what about your picks?
I have a buy. In fact, I have all buy list today. UPL is my first recommendation. Buy here with a stop at 623. Look for a target of around 644, 650. Though I suspect I'm very bullish on the long-term chart, so we can look at bigger targets there. The other one is Bajaj Finance, which is a buy with a stop at 1825 for a target of 1900. A buy on Chola Finance with a stop at 1374 for targets of 1430. And Gas Authority or GAIL India is my final buy call. Keep a stop at 158. Look for targets of 170.
Okay. All right. Gentlemen, we'll speak again. Thanks very much for joining us at this point in time. That's views coming in from Mitesh and Shrikant. Now, these reciprocal tariffs, etc., which are going to come through in April. Sud is here with just a quick sort of look through as far as impacts are concerned across sectors and maybe some stocks even. Sud, what do you have?
Good morning, Prashant. So first of the news, US President Donald Trump has signed an executive order, and this order is for reciprocal tariff, not universal tariff. Another positive part, if you can say, is the implementation is unlikely to happen immediately. US agency will conduct a study, basically do the study on tariff structure, and implementation is likely to happen from the first week of April, or can say from April 2. Now, what all sectors will be in focus? Auto, steel, aluminium, and pharma. But also, President Trump has made some statement related to India specifically. He says India imposes enormous tariff, and that's the reason it's a very difficult place to do business. India imposes up to 70% tariffs on US cars, and he gave an example of Harley Davidson. He said Harley Davidson could not sell their motorbikes because of high tax, and because of this, US wants a level playing field on trade with India, and says whatever India charges on tariffs, US will do the same, and this would be fair for both US and India. So for now, it's not universal tariff, it's reciprocal tariff, so can be taken positively, but obviously this topic will be in focus going ahead until the implementation comes in the first week of April.
Okay, all right. Thanks a lot for that, Sudarshan. Well, Sid Khemka still with us. Sid, since Sudarshan briefly mentioned the motorbike, your view on Royal Enfield? The premium bikes, something that doesn't get impacted really by the EV threat. How do you view the stock?
Yeah, hi. Good morning, Nigel. Glad to see you. So if you look at iShares, I think Royal Enfield does have exports in US, and if the reciprocal tax were to be implemented, then there will definitely be some impact on iShares. Thankfully, the India business is doing very strong, and we saw the new launches being picked up very well. Within the overall setup, I think the last Q3 numbers that came out a bit weak, with EBITDA margins contracting 190 basis points because of the higher investments in some of the new launches. Management is now clearly focusing on growth and is willing to let go of margins. So that was a bit negative, and the stock reacted negatively. And I think among the two-wheeler companies in India, the highest exposure in terms of exports to US could be a big impact for iShares. So really cautious in this point of view. But what we saw yesterday or today morning, the visuals coming from US, I think there is a lot of camaraderie that we saw between Trump and Modi, and I think they will iron out a lot of issues with India willing to accommodate the US demands. So in that sense, we'll definitely have to wait and watch. But my sense is that India is willing to lower taxes and accommodate what the US demands are. And hence, we may not receive the kind of reciprocal tax tariffs that a lot of other countries could receive.
Okay. Since it's Friday, let me ask you about some consumer stocks, Siddharth. Starting with Swiggy. Swiggy rallied big time yesterday, right? Because they're now going to be charging a little more from partner restaurants. Do you think this makes an interesting bet, or would you go with Zomato? And then let's talk about the beverages as well. So that's on the food side, or the food delivery side, or quick commerce. On the beverage side, we've had a raft of earnings come in from Alco-Bev companies. Anything that you like?
Yeah, definitely, Swiggy. So I think Swiggy, if they are able to charge higher and improve their profitability, that would be pretty good. But right now, the entire quick commerce industry is facing intense competition, especially from Zepto, which is expanding at a very strong pace. For itself, Swiggy Q3 net loss widened by almost 40%. What we see is that between Swiggy and Zomato, we like Zomato because of its already stable food delivery business, where it is generating a lot of cash. In the quick commerce business, yes, they have upfronted the capex, and because of which the near-term numbers would be a bit under pressure. But still, we believe at the current valuations and the overall business setup, the overall business is profitable, and hence we like Zomato over Swiggy. Swiggy, the path to profitability is still at least 2 years away. FY27 is when we'll see Swiggy reporting profits, and hence we have a neutral rating on Swiggy with a target of 460, while we have a buy rating on Zomato with a target of about 280. Between the beverages, I think United Breweries is an interesting result that came out. Volume was pretty strong, especially in the premium segment. Again, similar thought process where management is looking at market share and volume growth rather than margins. Margins we saw taking a hit. Some of the regions like North, Central, as well as Western regions saw good growth, and I would believe that with the business doing well and the demand being there, we would be positive on United Breweries.
All right. Fair enough, Sid. We'll leave it there. Thank you very much for joining us. Good conversation as always. Mitesh, 9-10 calls? You're on mute, Mitesh.
Bajaj Finserv is my chosen call. I'll go with that for targets of around 1900.
Okay. Bajaj Finserv did well yesterday as well. Bajaj Finance and Bajaj Finserv, both of them. Surabhi?
Okay. So those are some of the calls that are coming through on technicals. Gentlemen, thank you very much for that. Let's welcome in our next guest on the show. Gautam Trivedi, Managing Partner at Napen Capital, is with us, and he's with us in the studios now. Thanks very much, Gautam. Great to see you here in person. And
Happy to be here.
You're joining us at very, very interesting times. Everyone's trying to understand the contours of the, Trump 2.0 era. Let's start with that because that's the big headline.
Sure.
Now, this whole tariff business, which is still being negotiated. And I was reading the press statement, the joint statement, where India is agreeing to buy more, even in defense, something where, our indigenous industry has done so well. But even there, so it's all unraveling. From a market perspective, is there a straight corollary? Would you look at defense stocks differently at all in this new environment?
So I think let's look at the facts. India's trade surplus with the United States now is at a 45.7 billion number. That was for calendar 2024. That's up 100% since 2015. So in 10 years, our trade surplus with the United States has gone up significantly. That's one. I mean, again, we're not at par where China is, but significant. That's a significant jump. The second element is that the Commerce Secretary nominee, Howard Lutnick, basically said that by the 1st of April is when they'll have the numbers. And that means reciprocal tariffs across the world, including India. Yeah. But I think the good news here is that at least our Prime Minister has taken the effort of being, I think, one of the first that I know of senior leaders in the world to actually physically go to the States, meet Elon Musk, meet President Trump, and hopefully soften the blow. So we'll know in 6 weeks what exactly is going to happen. But potentially, yes, the defense stocks could potentially see a pullback.
Yeah, because they're looking at a range of issues there, from missiles to even sort of on-ground equipment. A lot of it is being made by companies, listed companies. So we'll perhaps have to see how this plays out.
The other thing with defense is if this Russia-Ukraine war finishes, right, that's going to lower demand for weapons, etc. But at the same time, that's an export opportunity. It's very small for India right now. Yeah. But eventually, Trump wants Europe to spend, increase defense spending.
That's right.
Protect your own. Why should we protect, right?
Yeah.
I mean, pay up. Gautam, how are markets looking from here on? I mean, we are oversold. There's all this news flow.
Yeah.
You think it's time for a bit of a bounce, maybe even short term?
As much as I'd like to agree with you, I'm still not sure. Because if you look at the absolute numbers of how much foreigners have sold, so if you take the peak, the 26th of September 2024 was the peak of the market. Since then, we've seen roughly about 2 lakh crores of selling by foreign portfolio investors. Why are they selling? Let's get to the bottom of that. The United States is growing at a GDP rate of 2.5%. That's a $30 trillion economy growing at a GDP of 2.5%. We're as expensive as the S&P 500. And if you look at the absolute earnings growth for 2025 for the S&P 500 stocks, it's a whopping 13%. So we pride ourselves sitting in India saying we have 14 to 15% earnings growth on a rolling 12-month basis, but the United States is growing at 13%. I mean, at least the listed top 500 companies. Of that, the Max 7 actually are growing at 18%, and the balance 493 are growing at an average of 11%. So again, double-digit strong numbers. And if you look at what President Trump seems to be outlining for the foreseeable few years, lower taxes, lower inflation, and bringing investment and jobs back into America, if you're an asset allocator sitting in California, New York, Michigan, Ohio, etc., why would you want to put money in emerging markets? If you look at it from July of 2024, Asia, ex-Japan and ex-China, we've seen a total of $56 billion of net outflows by foreign portfolio investors. So India is not unique in that sense. But if you are an EM fund manager who's got hit with redemptions, which a lot of them have, you'll sell the most expensive market first. And as a result, I think that's where we're getting hit the most.
You don't think enough has been, markets always, they're never at neutral, right? They're excess on that side and this side. So there was excess on that side. Maybe you're getting to a little bit this side now?
I don't think so yet. As much as I'd like to believe so, but I don't think so yet, only because foreigners have sold a mere 2% of their mark-to-market trillion-dollar holding, which was as of the 26th of September. So can they sell another 2%? Yes, they can. Do we have the ability to absorb all of that selling? I don't think so. I want to point one more thing out. If you look at the absolute amount even sold year to date, in the past...
Sorry to interrupt. We'll just come back, and it's an interesting point that you're making. Just addressing market open. What do we have? First rates, the indices, then stocks. 60 points higher on the Nifty is what you have on the Nifty. So 23,100. I mean, it's a positive start, but it's nothing very large. We've got a 0.25% higher on the Nifty Bank. And you've got the sensex, which is up, and mid-cap index is starting about 0.4% higher. it's too early to look at market breadth, but more up than down. But as we found out last few days, that tends to change. And yesterday was the same kind of story. The Nifty heat map gives you a snapshot view. It's mostly all in the green for starters. And you've got about 7 odd names which are starting in the red. So that's the open. It's a tentative quarter, 1/3% higher now. So about 75 points on the Nifty.
Okay, let's talk about stocks. By the way, the casualty of the morning is Senco Gold, 12% down on that stock. The EBITDA performance and the margin fall, I don't think market likes any of it. Just pointing that out because it's down quite a bit. But on the Nifty, let's track the green. 85 points higher. Where is it coming from? Hindalco's numbers are getting a thumbs up. Actually, it's not just Hindalco. Most metal stocks are higher because there seems to be a bit of a sense of relief because this whole reciprocal business, at least it's been put off till the 1st of April. That's the time when we get some actual hard numbers on tariffs. So most metal stocks are higher. Tata Steel, JSW Steel, Hindalco, they're the top trio on the Nifty. Then there's ICICI Bank, M&M. Trent is seeing some recovery. Trent almost back to 5,300 now. IndusInd Bank, Axis Bank looking strong. So the banks are doing pretty well actually this morning. ITC, we just have, ITC and ITC Hotels. Let's pull up both the stocks. The hangover is actually more on hotels, where BAT, British American Tobacco, has mentioned that they would not be interested in remaining invested in a hotels company. For now, the stock's taking it rather well. On the large cap screen, there's support from some tech names like HCL Tech and Infosys. And Reliance is doing quite okay this morning, about 0.5% up. So it's looking good for the large caps. Now almost a 100-point gain on the Nifty. The downside is only Kotak Mahindra Bank, some red on Sun Pharma, Dr. Reddy's, but otherwise the Nifty's looking good.
Well, that's right. Besides Senco, and I understand that there is, some part of it could be the hedging cost. And I think the management will come to clarify with regard to that. And there is a customs duty impact as well. For the time being, actually, the stock opened up 15% low. It's recovered a little bit. So we'll wait by. We'll have the management in the next 20 minutes on the channel itself. The other casualty this morning is Concord Enviro. I recall the stock listed, close to around 2 months or so ago. And from that 800 rupee mark odd, it's come down to around 530. And in today's trading session, it's down close to around 19%. So big downtick is what we're seeing out there. Swiggy as well is falling on decent volumes in today's trading session. And Natco, after the disappointment that we saw yesterday, well, that stock as well, is still down another 5% after falling 20% overnight. Besides the metal stocks, a few other names. Equinox India, that's higher on decent volumes. Samvardhana Motherson is up close to 1%. Bakrange, well, that one as well. Smacked in the last few sessions, it's up close to 5%. Some of the top volume movers. But a green start, the bulls will like it. The yesterday's high of around 23,250 odd. That'll be a bit of a resistance. But Gautam, you were making that point. Please go ahead with regard to the FI holding.
Yeah, so I guess the point I was trying to make was that if you look at the selling that started on the 26th of September of last year by foreign institutional investors, we've seen about 2 lakh crores of net outflows, more than matched by domestic institutional investors buying as much as in mutual funds and insurance companies buying as much as 3 lakh crores. Mm-hmm. However, the Nifty 50 is down 12.5% since. Year to date, the numbers are almost matching each other. FI flows matching with a domestic. Yes. So that tells you there's a third element at work, which is HNIs, family offices, AIFs that don't get clubbed with the DII buying and selling. And of course, retail, which is direct into the market, not coming through mutual funds. So that third element has really been determining the flow of the market. So we're still very much a flow-driven market versus fundamentals. So I think that's something you've got to keep your eyes focused on at all points of time.
Gautam, I'm just looking at this data with regard to, we focus on the secondary market selling from the FIs. Yeah. But, in the primary market, they've been putting money back as well. Now, the assumption is since the markets have got a little bit rocky, maybe, in fact, you'll see a supply of paper that will slow down, which could be a blessing in disguise. Because then, they don't have any other alternative to deploy some money, or maybe they want to hold on to that. Could that as well, besides the money moving to a US market or the Japanese market, could that as well play out? And then we could see the FI flows, the outflows slow down a little bit. Just food for thought.
I don't think so yet. Not yet, because the selling continues. And if you look at even the Chinese market, we looked at that in early October when China took off and then again slowed down. In the last 6 months, the Shanghai Composite is up, almost 15%. Yes. The HSCEI is up 33%. So those markets are still doing pretty well. So I think we have competition from China and, of course, the huge competition from the United States, where money's going back home.
You're sounding really cautious. What you're saying is these FPIs, they can continue selling more, and we're not sure how much of that selling can be absorbed. Till now, mutual funds have done a great job of absorbing.
Yeah.
And then there's the Chinese competition. I completely take your point there. We've been seeing what the Hang Seng is doing in the last 1 month, right?
That's right.
So 12% down on the Nifty from the peak. How much more? Possible?
I'm no soothsayer. I don't want to get into that. But the fact is, if domestic flows slow down, as you know, it's been about 12 months of a pretty hard period in the equity markets. And the fact is that as investors start to see that they're not making as much money as they were over the past 3 years, some of that slowdown could start impacting then, I guess,
flows and
the flows. Yeah,
let's hope that.
Exactly.
But actually, the retail investors have really held their faith. It's that missing third wheel, right? The amorphous, anonymous third wheel of family offices, HNIs, and some direct retail.
That's right.
That's causing the selling, and I wonder when they will stop. There we don't have daily numbers to track.
You know that dark circle is the smart money, right? So that's the...
That doesn't make me feel very comfortable because my money is in my mutual funds.
No, because, but FIs, as Gautam said, I think I was looking at from October, they've sold $21 billion.
That's right.
That's big. But let's get a sense from on domestic flows, right? And Nilesh Shah is with us, Managing Director at Kotak Mahindra Asset Management Company. Nilesh bhai, good morning. Good to have you with us here. You know, somebody messaged us saying that why are all of you guys in white and not Valentine colors? So I think you're...
You have a little bit of a shade of pink now, thanks to
shade of
Nilesh.
pink in Nilesh bhai. So happy Valentine's Day. Sorry, go on.
प्रशांत भाई, ये देखने वालों की नजरिया पे है कौन सा कलर है. आपको जो व्हाइट चाहिए वो किसी को ब्लैक भी दिख सकता है.
नहीं, बिल्कुल सही बात है. But talk to us about this flows question, Nilesh bhai. What Gautam was saying. I mean, he thinks there is more selling coming from a foreign perspective. We've been having this conversation for the last 7-10 minutes, and he was saying, well, but you know, the last month numbers which we got on SIPs, etc., rock solid still. So people are keeping the faith through this cycle. What are you seeing out there?
So emerging market today is like 1980s Indian cricket team. In those days, when Sunil Gavaskar used to get out, most spectators will start leaving the stadium because other 9 people were not going to do much. Today's emerging market over 20 years has underperformed developed market because China, Brazil, Russia, South Africa, Turkey, South Korea, they all have underperformed developed market massively. The only batsman who played in emerging market is India. Now, obviously, there is a quit emerging market movement going on. There is a proverb which says that Leela Sukha Sata Lelu Barre. So even if your grass is green, but if it is among the dry grass, it will burn. So as Gautam said, will there be some more FPI outflows? Quite likely, because there is quit emerging market. Now, second question on domestic flows. So far, you have seen the number yesterday. It's strong. And Prashant bhai, if you look at FY21 to FY23 household allocation, they have put more money in cash than they have put into mutual fund and equity put together. So I just have to convince people sitting on cash at home that if you keep currency notes in your home, and which is 35 lakh crore plus, it's not going to give you any return. And certainly it is going to depreciate. In equity market, there is hope. Hosla hai, to ho jayega. So as long as I can convince people to empty their tijori and put it into equity mutual funds, I think flows will continue. And it's not a tough job, right?
No, Nilesh, and actually, you know, you folks have been doing a fantastic job of driving that message home, right? The market's been really testing investors for the last now almost 4.5 months. However, people have kept the faith. So you're doing a great job of it, but I want to come back to the point that Prashant made. Whether this dark circle, as we're calling it, the amorphous third wheel, whether they are smarter than Nigel and me, because we are continuing with our SIPs and our mutual funds, right? But what does this tell us? The family office selling, the HNI selling, the absolute mid-cap capitulation that's going on, are they seeing something more than very smart mutual fund managers are seeing? Weigh on that debate.
So one, you know, on your shows, I have been saying for last almost 1 month, the last 1 year, that low floating stock counters have valuation which are very, very expensive. Now, those are getting corrected. I don't think so any mutual fund is invested over there. Similarly, when you have run up so much, Will there be correction? Answer is quite likely. So I think there are different turfs. Mutual funds, by and large, are into quality stocks, reasonably valued stocks. Many of the speculators, including retail investors, are more into momentum stocks. While the going was good, they made a lot of money. Now, going is not so good, and they are paying the price. So I think the turf between institutional investors, smart money versus dumb money is totally different. हम लोग क्रिकेट खेल रहे हैं, वो लोग हॉकी खेल रहे हैं.
I think you're giving us headline after headline. So I think we're already, people are noting it down, and I think you'll see copies.
But that's reassuring that this is cricket and they're playing hockey, and then something different is happening in that game, which is why the mid-cap
By the way, I just want to say one thing. Nilesh Bhai got cautious about 6, 7, 8 months
on
back.
Mid-caps and
on
small
mid-caps
caps.
and small
Absolutely.
caps. The Kotak team, actually. And I think Gautam also,
right.
from at least for a few quarters now, he's been sort of sounding cautious. So just... so maybe you've been able to create some cash, etc., which is
no, we have. Again, we didn't create as much as we probably should have. But we were running a screen just yesterday about the top 1,100 stocks. We run it on this software called ACE. 892 stocks have corrected 25% or more. That's from their respective 52-week highs. 125 stocks are down 50% or more from their respective 52-week highs. So that's been the extent of the capitulation that's happened in the mid and small cap space especially. And I think even when we're looking at some stocks to potentially look at and adding, but even after a 30, 40, 50% correction, these stocks are trading at 65 times. Some of them are trading at 45 times. They're not cheap anymore. Still not cheap. So they need to potentially correct more, or the fund flows basically turn around, and then again we're off to I wouldn't say off to the races, but at least you see a bottom in the market.
All right, Gautam, let's focus on a couple of sectors and themes that when things were good, everyone wanted to get in, whether it was the solar play, renewable energy, or if you talk about the EMS companies as well. And I think you all had some exposure in Syrma.
That's right.
So some of those stocks, there is a big growth outline. Maybe valuations were out of whack, but some of them have pulled back big time. Do you think they've come to those levels where you want to nibble a little bit, or do you think that the flows picture is so gloomy that you'd rather stay aside and then wait by?
I think EMS companies are starting to definitely look attractive, and there are certain companies, without naming them, that are in the air conditioning space, for example, where you are seeing global warming, you're seeing compressors not available. That's the extent of demand for air conditioners in India at this point. So I think those will certainly do well. But the whole EMS space, given the whole China Plus One strategy on which it's built, I think has a long runway going forward. So yes, these companies are starting to look attractive.
Okay, so that's about the EMS. Some of them are starting to look attractive. And also, if you could tell us about, we had spoken about renewable theme, solar theme in the past. How do you think that's shaping up? Because India is looking at a big capacity in renewable energy. And if everything plays out, then there's still plenty of growth, right?
Yeah, so I think at the heart of this entire renewable energy is actually AI. And if you look at the amount of energy AI is consuming today, it's ridiculous. I mean, a simple AI or a ChatGPT search consumes 10x the power of a simple Google search. If you go in for images and video, it's 50x. So the power demand, and we're a country where we have 750 million smartphones. That's a lot of smartphones, a lot of people who are accessing ChatGPT or other AI platforms. So I think our need for power is only going to keep exponentially going up. The United States is spending between now and 2030 an additional $50 billion to get more power, whether it's renewable or it's thermal. I think the power stocks are basically stocks that we've been looking at. We own some of them. The good news is they've started to have a correction. So I think now's a good time to relook at those stocks.
Okay.
Okay, all right. So those are, some stocks and themes perhaps that one can look at. Nilesh, to get back to your point, so we've discussed the flows picture. The question is now, what should investors be prepared for? Because whether it's the quit emerging market movement or it's the hockey players playing a different hockey game in the same cricket field, the fact is that it's been impacting returns, right? So what is your advice going to be? Still stay away from mid and small caps, or is this now a good time to start nibbling into mid and small cap funds?
So Surbhi, yesterday also we said the same thing. Today also we'll say the same thing, and tomorrow also we'll say the same thing. Investor has to follow the dharma of asset allocation. You have no control over how markets will move. None of us have the ability to predict market. And ऐसे बहुत सारे सुरमा हमने दलाल स्ट्रीट में डूबते हुए देखे हुए थे गुरूर कि they know what will be happening to the market tomorrow. So in our control, it is asset allocation. Today, you have to moderate your return expectation. This we have been saying for last one and a half year, that last 5 साल में जो return मिला है, that return is not going to come over next 5 years. Number 2, large caps looks better over expensive value, over small and mid cap or micro cap. And finally, this is time to go for reasonable valuation sectors over expensive valuation. And at the end of the day, Surbhi, please remember, more people have lost money waiting for correction than actually in correction. There are as many studies today published by various fund houses, including Kotak Mutual Fund, which shows that if you continue your SIP, whether starting at the top of the market or bottom of the market, the returns are not going to vary differently.
Okay, all right. One final question, Nilesh, I wanted to ask you before we let you go. You know, there was this SIP discontinuance. That number was larger than the new additions out there. And that was what's making the street a little bit cautious out there. But I wanted, there's a lot of theories out there. But prima facie, according to all the feedback that I got, is it's nothing that you should be really panicking about because there could be regrouping of SIPs. Wanted your comment on that.
So Nigel, when you have jaundice, you can only see yellow things. And there are 3 kinds of lies in the world. Lies, damn lies, and statistics. So if you are short on the market, you will view that number saying that, oh my God, SIP culture is coming to an end. If you are neutral to the market, to optimist on the market, you will say the opening stock of SIP was 10 crore plus, addition is 50 lakh, and closure is about 55 lakhs. Now, it's quite possible that there are some people who have moved abroad. There are some people who have consolidated their SIPs. There are some people who have kind of shut their SIPs in thematic funds. And there are some people who probably have, faced financial hurdle and they want to take their money out. So we'll have to see the trend. I don't think so. 1 month data can indicate anything. Please remember the amounts are going up and we have a long way to cover.
All right. No, absolutely. And I think point made, Nilesh bhai. और आपने पहले बोला सुरमा गुरूर मजा आ गया सुबह सुबह मन करता है हिंदी में हम बात करें अगली बार और शायद करेंगे. Thank you very much for joining us. Appreciate it very much here on CNBC-TV18. Gautam, good to get your perspective as well. And by the way, we have your good friend Samir Arora joining us next.
That's right. Samir.
So, you maybe want to listen to the conversation. Samir is, of course, founder and fund manager at Helios Capital. Samir, good to have you with us here. Good morning. Thanks very much. You're smiling. I think you caught some of that conversation earlier.
I was hearing, before this, I was hearing Gautam's extremely bearish conversation.
Gautam is miking off. I'm asking him to
mic back on. Totally wrong.
Why? Tell us why.
First of all, you can't say that FIIs, because they have sold since September, have gone away, because in September they put $6 billion. So therefore, you can say from October 1 they did. So what did they discover? They discovered that the US Trump is coming back and therefore US will be a better place to invest. But you can do this for 1 year. You will keep saying this argument because by this time between US and India, the difference may be already 25%, number one. Number two, in a global portfolio, maybe 60% or 65% is US. And 1% or less is India. And similarly, China is 1%. So somebody met in a board meeting and said that we should make our 65% into 65.02%. And we will take that 2% out of India, out of the Indian 1%, you sold 2%. The point is that trade is played out and it is over in some sense, not literally, because even today or yesterday, selling. Exactly. But picture, this trade cannot go on forever in itself. Secondly, the pension funds and the endowments and all those, if they say that today US is better, therefore today I will increase by selling India, I think we always had this view that at least some investors in this world, not us, not everybody, are long-term investors, and there are equal number of people who say, or not equal maybe, but quite a few people who say we are buying a market that has not performed well or whatever. But the main point is that there is 65% or whatever, some big number like that in US, and there is 2% in India, China, and there's 33% in the rest of the world. So why we should compare ourselves with the US only, compare ourselves with the rest of the world, whether they should be sold or not. The point is, if you look at flows, even December, it was positive number. So it is not going to be that every day for now, forever, it will be selling. And yesterday's this thing, which I've been saying forever, that Trump is a very positive influence on the world. And he's definitely a positive influence on India. Because we don't need 100% tariff on cars and 80% tariff. All these things should be sacrificed in 1 minute. If we have tariff on steel, it is you are just helping two companies, helping the rest of the economy.
Samir, and Gautam is waiting, and we'll come back to that flows picture. Since you yourself brought up this India-US from the latest news flow, anything stood out to you? I mean, do you have a strong view of what has happened in the last 12 hours or so? 12, 14 hours, what you've heard?
I'm saying that's the thing is, if you look at the trade deficit to trade deficit, it is easy to narrow by saying I'll buy defense and I'll buy oil and all that. But there is a second level where, let us say that there was no trade deficit for US with India. Even then, this second part is not clear that for countries where there is no trade deficit, there will not be a reciprocal tariff thing. So then we have to see where we have visibly high tariffs, and does it matter to the country as a whole that those tariffs are reduced a little bit. And we know broadly where they are very high and where they are normal, and the very high, and we know that cars, we know you can do anything you want, but Tesla will be in India within 12 months. You broadly know that in theory, if India has to fight with US, then they have to allow BYD and others to come in. So you look sector by sector. What will happen to our financial sector? Nothing. What will happen to our broad consumer sector? Nothing.
What will happen to auto, Samir?
Sorry, sector, nothing.
Tesla will be in India with very low taxes? In 12 months?
It doesn't have to be zero. No, nobody's asking for zero.
No, but very low taxes, you think? Because you have a long-standing negative view on autos. So just, quickly.
No. Tesla is because even 1 year ago, when Elon Musk was coming to India and they were saying we'll allow X number of cars, and in return, over the next 2-3 years, you will invest 500 million or 750 million into some Indian assembly. I think all that has to be done, and that is for the benefit of India. It is not that there are 3 car companies we have to protect or 2 steel companies. It is good. As long as it was not affecting agriculture and other things, where it will be difficult to say that, how many people are getting hurt. But even if you suppose, in theory, I don't exactly even know the tariff on that, but suppose we have tariff on steel. You think really it is for those 2 companies that steel is being bought by 1,000 other companies who are making auto and who are making refrigerators and ACs and construction. So it is a within India thing. Why should we get so hyper that some 3-4 companies in one sector and 2 companies in another sector will be hit? It's not going to become zero. It's not you will have Indian auto industry not there, but they can be brought down to make it less visible.
No, Samir, take your point. I don't think, at least as of now, we don't have evidence of some major damaging impact, even if some tariffs are raised, like you're saying, on maybe import of some cars. Import of some. I take your point. I think defense is the other watch point. We have to really figure out, and we asked that question to Gautam as well, that, if we start importing a lot more defense equipment, what happens to those stocks? But I want to go back to the larger question on what's happening to the market. On the point of flows, the argument that Gautam made is that there are 3 pieces, right? 3 wheels. FPIs, they're continuing to sell, whatever is the reason. They might find India a little overvalued. They think there's better value in the home market. Whatever is the reason, they're selling. Then there is the HNI, family office, direct retail. This piece has been selling. The only piece that's buying are the mutual fund investors. Now, till what point can it hold up the market? I mean, and we're still down. Despite them buying, we're still down 13%.
Exactly.
So where do we go from here?
Was right in saying Nilesh was right in saying that they have different portfolios. How do we know that? If you see on Twitter, all these guys who made a lot of money in the last 5-6 years, individuals, their portfolios, whatever these guys report, we never check what they're saying. They are not down in the range of where mutual funds are down, which is say 10, 11, 8%. Mostly they'll be down 20 and 25 and 30%. And therefore that is
They're supposed to be super smart, right? Smart money. They're supposed to be very smart money.
Super smart. No, it is not super smart. They are operating with a very high risk, high return, buying very extremely liquid at very small caps. So it is obviously super smart, but that super smart can't, if you are, then you have to see it over 5 years. You can't say last 3 months somebody was not super smart. Like Tesla stock is down 18% this month, so he's become less smart. It's not that. You have to see broadly how that market those guys are
the point.
No, absolutely. They take high risk, high return bets. Absolutely, yeah.
I have a simpler answer.
Yeah.
I have a simpler point that we say that FI are selling, but then we talk about the fact that 40 companies are trading at more than 40% or whatever. The point is they are selling the large caps where everybody, each and every fund manager, bearish or bullish, says that the large caps are not overvalued. So therefore, this does not reconcile that way. That then why are they selling those stocks first? Because they are selling because our market is falling. They are.
So, and that is my question. I'm asking a very simple question now, Samir. Very simple question. Has this market, you think, fallen enough? Are we anywhere close to the bottom or not? Simplest question.
Yes. I think we are somewhere near the bottom and nobody knows precisely, but the 3 or 4, 5 things which were India created, which were say liquidity tightness or poor results, or this basically in a sense, or interest rate being higher or whatever, or inflation, all those things have been addressed either on their own or by Reserve Bank or by the government, or spending by government not being there for 6 months, and therefore 3 month quarterly result, 3 months or even 6 months quarterly results being bad. Now please look at it from April 1, your comparison will be with that quarter in which we say that nothing happened. And then the next quarter comparison will be with the 1 year ago quarter in which again nothing happened because of monsoons and other thing. And so therefore plus minus. Please also note that in December, just the month of December, FIIs were net buyers. So what made them negative in January? Suddenly we have to give some logic. So our logic can be that A, the results were bad, and B, a little bit bad. And secondly, that, the feeling became that the rupee will be let go and therefore there might be more depreciation of the currency and all that. So that also plus minus has played out. Maybe another 1-2% may happen. And therefore you will not know exactly when it bottoms, but it can't be that this one-way trend of them selling India. Just to tell you one more thing. In the month of January, they only sold India, no other market. So the net selling in India was the total selling. So therefore it can't be they've given up EM. It means, okay, for some time they gave up India. That also beyond a point, doesn't happen. Particularly, it's not off somewhere there, who knows exactly.
No, but I think that somewhere near the bottom, it's a good enough, because lots of people, many have lists ready of what to buy. They just want to know whether they should buy it lower, much lower, if there is going to be more selling. So you've given us a broad sense, your sense, that maybe somewhere near the bottom. Obviously,
I'm saying you cannot overextend any logic.
Obviously, exactly.
It's broadly there now. It can fall another 5%, who knows?
Absolutely.
But you can't say it's a one-way thing, because that way the correction has happened. Because Gautam himself is saying so many stocks have fallen 50%. But don't buy those stocks. Why they are selling a large cap?
Gautam wants to come back.
Gautam is sitting in stoic silence. Gautam, quickly, 15 seconds.
Do you agree we're close to the bottom?
When Mr. Arora talks, everybody just listens.
I will give Gautam separately offline.
Yes, exactly. I will get a earful today, by the way.
Right after this, right? Right after this. And we won't... but I know, both of you are great friends, and we'll pick up on this. Maybe, call you both back.
थोड़े smile करके आया करो यार.
I can't smile as much as you, because your smile itself basically makes the market go up.
This is great. A bull and a bear argument together on the screen.
No, but can I just say one last thing about what Samir said about the auto market? The fact of the matter is we are spending too much money on buying cars in India. With the most, I think one of the most, after Singapore, which is where Samir lives, one of the most expensive auto markets in the world. You fly 2.5 hours to Dubai, you can get the same foreign car at half the price. So the socialist mindset of the government needs to change. And the fact is, we have 5 slabs of GST. I don't know if you guys knew that. 5 slabs of GST for cars, for passenger cars. And I sit on the board of Landmark Cars, and then as a result, I know. But the fact is, we need to lower that, and ownership should become more affordable.
Absolutely. And why just luxury cars? Maybe other stuff as well, right?
Yeah,
and,
absolutely.
Well, thank you very much, Samir and Gautam, for that very interesting discussion and sort of varying viewpoints. And as I was saying, we'll get both of you back, maybe, have another one of these, not bull versus bear, I think that's too cliched, but, opposing viewpoints.
Healthier debate.
Make him bullish.
Healthy debate. All right. Thank you very much. Thank you very much for joining us. We have more coming up on the other side, a focused discussion on the defense sector with what has happened, of course, with Prime Minister Modi and President Trump last night, some announcements, etc. Amit Kalyani of Bharat Forge and Ashok Alturi of Zen Technologies will be talking to us about this defense framework which has been announced, which will run for the next 10 years. Stay with us.
Welcome back. You're with us on Corporate Radar, and now it's time to talk what the defense sector perhaps may have in store, given this very high-profile meeting between Prime Minister Narendra Modi and the US President Donald Trump. Well, that meeting happened overnight. Foreign Secretary Vikram Misri says that the defense sector remains a very important area of cooperation for both nations. He also adds that India and the US are to finalize a new defense framework on acquisition of the F-35 fighter jets. The Foreign Secretary told CNBC-TV18 that the formal process with regard to the acquisition of advanced platforms has not yet begun. Take a look.
Defense, as was pointed out by both leaders, remains a very important area of cooperation in the strategic partnership between the two countries. The leaders announced plans to finalize a new 10-year framework for the US-India major defense partnership in the 21st century. This is a framework that will run from 2025 to 2035 and is expected to be finalized later this year. One of the striking aspects of the joint statement in this regard is a process that the United States will begin, whereby it will review its arms transfer regulations, including the international traffic in arms regulations, in order to streamline defense trade, technology exchange, and maintenance, spare supplies, and in-country repair and overhaul of US-provided defense systems. I don't think with regard to the acquisition of an advanced aviation platform by India, that process has started as yet. So this is currently something that's at the stage of a proposal, but I don't think the formal process in this regard has started as yet.
That's the F-35s that the US president says he really wants to sell to India. So what does it mean for the domestic industry? Well, let's talk about this. We have with us Amit Kalyani, Vice Chairman and Joint Managing Director at Bharat Forge, and Ashok Atluri, Chairman and Managing Director at Zen Technologies. Gentlemen, thank you very much for joining in. Both of you, of course, and through your companies, are big players in the India defense story. And I want to start with a broader, big brush question first up. Given the parlays and given the push from the US to induct, whether it's the jets or I'm looking at the joint statement now, there is the Javelin anti-tank guided missile system, the Stryker infantry combat vehicle system. All of this is coming in. So could there be a bit of a cloud on the indigenization story? Could some product lines at least be under a bit of threat, the indigenously made product lines? Amit, if I could open with you.
Yeah, hi. So first of all, I think the meeting between our Prime Minister and President Trump was extremely cordial and very strategic. It was clear that America is interested in doing business with India, and that India and America are natural allies who potentially can, partner to be unbeatable. On the defense partnership, the very fact that the US is talking about selling the F-35 to India basically means that our relationship with the US has evolved to a point where we have moved up into a select group of nations which are offered the latest and the best technology that the US has to offer. And if you look at all the countries that operate such platforms, they all have a strategic long-term bilateral relationship in the whole value chain as well. So I see this as a huge big plus, and quite frankly, we don't have any technology in the country or made in the country which is anywhere compared to the F-35 that the US has. So this clearly signals that India has gone up in the echelon of strategic echelon where as far as the US is concerned.
So, no, it's not. My question was not, Amit, only on the F-35s, and I completely take your point there. But like I said, when we're talking about infantry combat vehicles, we're talking about a different range of, guided missiles, etc. It's beyond the absolutely high-end fighter jets. They seem to be wanting to get into other arenas as well. Is that not a worry?
No, it's not a worry because at the end of the day, as a country, we also have our policies. Things like F-35 will be imported, whereas other platforms, they will have a combination of some import, some make in India, and some longer-term MRO, other opportunities. So it helps you get into the value chain as well. Please remember, once these platforms are sold into India, they need to be maintained in India. They need to be serviced in India. So that opens up opportunities for Indian companies as well. And if those platforms are truly next generation, then that also helps India and our Indian armed forces get more modern platforms faster. And there's nothing wrong with that because India has a huge defense budget. And if you look at the non-aerospace side, there is a lot that India is already indigenizing. So whether it's the Javelin or the Striker, quite frankly, I don't see an issue with it long term.
Let me ask Mr. Atluri the same question as well. Mr. Atluri, do you concur? Because I was reading and there's so much literature around this. I think they're talking about some howitzer guns. There's talk about drones as well, of maybe higher capability, higher technology. But do you agree that Indian domestic manufacturers don't have any reason to worry, and this will actually open up more opportunity?
Yeah, I can. So, I completely, a little disagree with what Amit is saying, in the sense that, the F-35, they completely, if you listen to Elon Musk, what Elon Musk says is, it is obsolete technology. The drones could perform many of the same missions without the risks. He said there are design flaws, broken at the requirements level, expensive and complex jack of all trades, master of none, and the worst military value for money in history. These are all which the cabinet minister of Elon Musk, or Trump has said. So, so what I'm saying is we should definitely cooperate with America, and we should buy stuff that will make us win the war against China. So the stuff, we should not look at the rearview mirror and buy some stuff which America itself is finding like white elephants. And, so I think we should again, I think we have really done a lot of work. And when Mr. Modi is approaching the Americans while discussing, they should think about two things. One is, of course, they should protect something that is already world-class, that has been developed in India. Second is, they should not just say, listen, I want to become a part of your value chain. I mean, we are IP developers. We should always say, let us design and develop together, and maybe manufacturing also can be done in India. The IP ownership should be jointly held. So I think that is one thing I always say. And by the way, the things which are moving in the defense in US are completely towards the way the India has been doing. It used to be cost plus model in America. Now they are saying that you make the product first. Like Elon Musk said for for the rocket programs. He said you are 20 years, none of the rockets flew because you are following a cost-plus model with Boeing and
zero cost model, and then build up from there.
Basically. He said you buy only when it flies. That will be the same model will be in India. That's in Make 2. That's the same model we have. So America is going to follow the model that India has now. And I think we should buy for stuff for winning the future wars, not look at the past, mirror and buy old stuff.
I'm sure we'll keep those things in mind, Mr. Alturi. You have doubts?
No. I mean to say, the F-35. Nobody is going to buy that. I mean, that's a white elephant. Nobody. If you see operational readiness, so many of the F-35s are not ready for war. Even in the U.S., the inventory, they don't work. Yeah.
Okay. That's an very interesting point that you bring out. By the way, the Foreign Secretary was asked later because Trump said F-35. We didn't say. The Foreign Secretary was asked, and the Foreign Secretary nicely sidestepped that issue. He said, well, it's a proposal. We will look at it, and we will. There are many steps to go before we get to a point of actually buying it. But they said it's a.
Yeah, I think the war is moving toward drones and anti-drone systems, and in both we are somewhere. So wherever are the weaknesses between India and America? We should get our strengths together in both. Anti-drone also, then is one of the leading in the world. So I think we should collaborate in that manner, win-win manner. Yeah, sorry.
Okay. No, away from the US, because we don't have very much details, right? There's a cooperation and this is very specific. But the other big talking point is going to be this Russia-Ukraine war, which perhaps, there's some ceasefire which is announced. I mean, at least if you follow the headlines very simply, if that were to happen, maybe initially, from a stock market point of view, all these European defense stocks perhaps go down. But the bigger thrust for Trump has been that Europe needs to spend more on defense. The defense spending is very low. They need to increase it. And that's a slightly longer term view. Does that in any way open up opportunities? Mr. Alturi, you go first and then Amit.
Yeah, I think America is, we have, as we speak, we have opened offices in America, and we are completely aligned with Mr. Trump's, President Trump's policy of, setting up manufacturing plant there. And we also want to address the South American and NATO market from the US in addition to North American market. And we definitely, again, the whole point is that we should do it in a win-win manner, and it's not that.
No. I was talking about European demand. You think the defense spending will go up substantially?
No, absolutely. European demand will come down post the war, and I think a lot of defense stocks in Europe will be impacted by that. There's no doubt about that. Yeah.
But longer term, you don't think with Trump pushing them to increase their share of defense spending? I mean, why should we protect your borders? Do it yourself. That seems to be the message, Mr. Alturi.
President Trump would like them to buy some stuff from America more than anything else. So you think? I think it will be more American stocks going up rather than European. Yeah.
Okay, Amit, your quick last word on this.
I think we look at things from a different perspective. We've been operating in the US for a very long time, for more than 40 years, and while what Mr. Alturi says makes sense, but I think we have to start somewhere, and there has to be a relationship built up, which really hasn't happened over a long term. Coming to Europe, it's very clear that the European countries have to increase their defense spending as a percentage of GDP. If you were to look at the European economies where deficits are going up, where is the money for spending going to come? So clearly, they have to stretch their dollar or euro much further. And the only way to do this is, how do they buy things which are more cost effective and, make more out of less. So I think that's really going to be an opportunity for Indian companies to co-produce, co-develop, or even sell our products into the European markets.
Yeah, absolutely, gentlemen. This has been a very, very interesting conversation. We hope to have more of them. And absolutely, Mr. Alturi, I think the nation will hope that a lot of your concerns, I'm sure they will be taken on board and addressed. And indeed, India would not want to buy the hand-me-downs, the obsolete hand-me-downs of any nation for that matter. Why just the US? Thank you very much for the perspective. We do have to take a break right now. Come back on the other side and we'll focus on Senco. Remember, the stock opened out with deep gashes, almost 15% lower. So what is the issue at the operational level? We'll discuss this with management in just a bit.
Welcome back. Let's focus on Senco Gold. The stock is down close to around 18%. To help us out with what went wrong in the past quarter, was there any one-off and what's the way ahead? We're joined by Mr. Subankar Singh Sen, the MD and the CEO of the company. Hi, Mr. Sen. Good morning. Good to see you when. Well, the big problem point has been your gross margins, which have seen a sharp reduction. But in the past quarter, there were a couple of one-offs, I believe. So first, let's quantify them. There was a custom duty impact. There's a hedging loss as well. Quantify both these two, and X of that, what would your margins look like?
So see, if we look at the overall 9 months numbers, you will see that the adjusted EBITDA, because there has been a 58 crore impact due to the customs duty, which has led to a particular loss, leading to a lower EBITDA. And along with that, what we have seen is that the stud ratio, because diamond jewelry sales in the overall jewelry sales have not grown to that extent as the overall. So while the top line has been amazing, we have grown by almost 20% from 4,200 to 5,200 crores. But because of hedging loss and the customs duty, the impact has been 70 crores in the Q3. So in Q3, compared to the Q3 of last year, when you compare the numbers, the EBITDA percentages look much lower, from 11.5% to 5.5–6%. But if you look at the 9 months, it is going to be normalized, and we are quite confident that when we go to Q4, we are already looking and seeing that the diamond jewelry sales have picked up, the stud ratio is improving, and the impact of duty cut has already been taken in Q2 and Q3. So Q4 will not have any impact on duty cut. Things will be back to normal, and we will continue towards an EBITDA of close to 7% and the top line growth of 18 to 20% year on year. So things will fall in place, and the hedging loss, the movement of gold price, the duty cut, all the the challenges and the losses that have been there have been taken into account, and things will get back to normal.
So 3 points you're making. One is the customs duty and hedging loss was around 70 crores. You're saying margins will rebound to around 7%, and your top line growth will be 18 to 20%. Is that correct?
Exactly.
Okay, so that's how you'll end this year. What about for the next year? What kind of projections you're looking at?
So for the next year, we have always been saying that our top line numbers, the growth will continue to be 18 to 20%. So from around 6,300 to 6,400 crores that we see, the top line numbers for this financial year, we will be aiming and endeavoring towards a 7,500 crore top line for the next financial year. And again, looking at the EBITDA numbers, we have continuously focused on having an EBITDA of anything between 7 to 8%. So that will be the numbers in terms of EBITDA. So if we bring down the PAT levels, so we will be very close to approximately 300 odd crores of PAT. These are the broad numbers for the next financial year. It is only that in this financial year, the duty cut that the government has done has its own impact in terms of the increase in growth and, to curtail the black money and the curtailing of any kind of smuggling. So it's been a great effort by the government. But yes, it has its own impact on the financials, and that is what we have seen. But we are quite confident that going forward, things will get back. And the next year we are looking very, very exciting, because if you look at the increase of diamond jewelry sales for this particular last 2-3 months, we are seeing that the diamond jewelry sales have picked up. It is growing at plus 50% year on year. If we look at the wedding season, we have a large number of weddings till April. So in terms of top line, we do not see anything. The stud ratio, which has taken an impact because of the lower diamond jewelry sale in H1, from Q3 and Q4 onwards, we have seen that. Again, the stud ratio is getting back to normal towards 11.5%.
So next year, 7,500 crores, margins at approximately 7.5 to 8%, and net profit you're looking at is around 300 crores. Did we get all those three numbers correct?
Yes, exactly.
And studded ratio, studded sales will stabilize around 10–11%, or will it go higher?
No, it will be around 11–11.5%.
All right. As per your calculations, what kind of market share do you have, and are you gaining market share?
So market share is a number that is not very clear. All we can say is that, we are seeing a steady shift from the unorganized to organized segment. And, our strength and our expansion, our growth is a combination of growth, what we see in Eastern India and Northern India. In terms of number of stores, every year we intend to open 18 to 20 stores, and we will continue to open 18 to 20 stores, around 8 to 10 company-owned, company-operated, and 10 odd franchisees. penetrating into the tier 2, 3, 4 towns and cities. We are seeing that the growth that we are seeing in urban cities as well as the smaller towns is all happening at the range of 19 to 20%. So that is a very good signal that the shift from unorganized to organized is happening. And with the growth of organized sector, we will continue to ride the wave and move forward.
All right, what's the message you would like to give your shareholders? Mr. Sen, you're making very, very big projections, but your stock is down close to around 18%. Your investors clearly are very, very nervous after looking at these numbers. You've clarified on the call, you're clarifying here on the channel as well. What's the message you'd like to give them out? I think the stock has corrected more than 30% in a matter of 2 months or so.
Oh, the Q3 is usually a quarter where we have seen the best performance for the jewelry sector. And in terms of top line, once again, we have seen a great performance in Q3. But, if you look at Q1 and Q2, you will see that the profits, the EBITDA, the growth that we have seen compared to previous year has been higher. And it is a fact, and we are all aware that the duty impact will be there. We are aware that the price movements in gold has its own challenges, and that has going to impact on hedging. So yes, the investors have been on an expectation that Q3 usually has been a great quarter for top line as well as bottom line. But because of the great Q1 and Q2 in terms of bottom line, Q3 is normalizing it, and Q4 onwards will get back to normal. I think it's the kind of expectations and the numbers that have come against the Q3 expectations is what is making the investors feeling a little jittery. But once again, we would have to see the 9-month number. We do not see just a Q3. We see the overall 9 months, and there we will see the adjusted EBITDA is at 6% vis-a-vis a 7% in the previous year. So we are just down by 1% in adjusted EBITDA, which we are confident in Q4 we will move towards 7% once again.
All right, Mr. Sen, thanks a lot for joining in and taking all our questions. For the time being, the stock is under pressure. You're guiding for better times ahead. But for the time being, the street is taking note of the past quarter's numbers, which explains why the stock is down close to around 18%. Slip into a short break. On the other side, we'll have our special segment, Indionomics. Lata's waiting for us with a couple of guests.